I want to show you guys that what we predict and what we talk through in this sets us up to be 10 steps ahead of the retail crowd when you understand these things. First portion of the breakdown, we're going to do a complete fundamental overview. We're going to do a digest of everything that's been going on. We're going to take a look at the inflation in detail, what came out, what we were talking about before the inflation came out, all the little tiny tidbits of information that myself and Scalper were giving you guys so that way you know you're part of a community that is locked the F in. Then we'll kind of full circle. We'll pay attention to what we're going to need to be mindful of tomorrow, as we do have some more inflation data on the horizon. More Fed speakers are also set to come out today and tomorrow that we need to be mindful of. Then we're going to take a look at the current tariff landscape, some of the recent announcements between the EU, other major jurisdictions like Mexico, Indonesia. Take a look at that landscape and the rhetoric that we're seeing from that. And then we'll also take a look at the geopolitical landscape again, because these are all going to be things that we need to be mindful of moving forward for price direction, considering where we're currently at. Starting off here in the general chat, Scalper's been cooking. So here's Scalper with the timestamps. This is back from 8/12/2020 freaking 4. And Scalper was given these institutional levels of $123,000 per Bitcoin. Okay. So Scalper gave these levels months in advance just to show you guys how accurate these institutional sell and buy levels are. So that was just one little example I wanted to give you guys. Then here more recently, this is from a conversation that took place just the other day on the 12th. Scalper was conversating in the chat with Kevin, and he was pretty much mentioning that once these highs are taken out in the total cryptocurrency market cap, we're most likely going to see some profit taking, hence a pullback in all assets, a very high probability if the market cannot break above institutional sell deltas. Again, now here we are, and we're seeing that slight profit taking environment. And then here, this is a report that I wrote out to you guys July 11th at 8:26 a.m., 4 minutes before the meat of the New York session starts trading, because it starts trading at 8:30 a.m. here Central Time, 9:30 a.m. on the East Coast, and then that would be, what is that, 3 hours behind, so 6:30 a.m. Pacific Time, right? If you head over to that specific report, I'd primarily mentioned to you guys that our upside targets for XRP was going to be $2.76 to the $3 range. Didn't give you guys any higher price targets than that in that specific report, because again, we had talked about we needed to see some significant bullish price action and bullish scenarios, supportive fundamentals that are going to take XRP's price action higher in order for us to see some higher prices. We stalled out at $3. Buyers were not able to make a bullish attempt to break above that and hold it as support. And since then, we have ranged below that. You can kind of see that right now, that level is still holding. We have not come back down into the deltas. We'll touch on this here in just a second. But to briefly talk about the fundamental landscape. So now you guys have seen technical analysis is extremely accurate in this community. Now let's focus on fundamentals. So again, combining all the things that we deliver in this community, this is yesterday's report. So I want to show you guys that what we predict and what we talk through in this sets us up to be 10 steps ahead of the retail crowd when you understand these things. And I'm going to show you all how these fundamental reports that I delivered to you guys are exactly what reports are coming out from a bank. This is an ING report. ING is an organization, a financial organization. If you guys don't know who they are, just go check them out. They're a valid financial institution. And word for word, a report that they wrote the day after our report here at CYPRX mirrors exactly what we were telling you guys ahead of the curve. Okay, so just to show you guys that you're tapped in with institutional information, this is clutch stuff here. So yesterday when I mentioned our key focus ahead was the core CPI and PPI inflation data set to come out today on Tuesday. The main event for markets this week will be tomorrow's inflation data. And I said right here, the consensus expects the core CPI to tick up from 2.8% to 2.9% year over year. This slight increase, if realized, I highlighted in bold, is already priced in. Okay. And then right down here, we talk through different scenarios. And this scenario is the one that played out, a muted uptick that markets are slightly shrugging off. Where I said here, markets digest the data calmly, and consolidation continues with no major risk-off move. Expect a slight bullish increase or more sideways action across crypto until clearer narratives arrive, which is pretty much exactly what we're getting. You can see that this is pretty much consolidation price action. If you spread this out, XRP's price did not jump significantly up, breaking above sell deltas. It did not significantly depreciate in value, breaking below buy deltas. It's pretty much just ranging in a consolidation move, moving sideways in no man's land in between two deltas. So exactly the analysis that we had predicted has now been met. So now moving on, okay, this is something that I found, and I'm sitting there reading it this rising after I wrote my report to you guys on how the inflation data came out. And I went online to just look at some of the Twitter comments that are breaking, and you can see right here one of the biggest followers or one of the biggest following communities in the crypto ecosystem, Watcher Guru, posted this out 3 hours ago, and it says, breaking, the US inflation rises to 2.7% higher than expectations. I'm not too entirely sure why they did this because this is false information. This is fear mongering, and this is the stuff that I was trying to tell you guys about. Because market participants that are retail traders reading this would expect some significant or sharp sell-off, thinking that inflation data came out higher, when in reality, the data actually came out in line with the consensus. It came out exactly as the market had predicted, which is exactly what we talked about in yesterday's call, would be a key scenario that the market had already probably priced in, right? And so, reading my report from today, I said to you guys, inflation came in line with the consensus. Both headline and core month over month CPI came in at 0.3% and 0.2% respectively, perfectly in line with the market forecast. Year over year inflation was 2.7% headline and 2.9% core, again matching or slightly under expectations. This suggests that inflation is still running modestly above the Fed's 2% target, but not accelerating out of control. Minimal tariff impact so far, despite prior warnings, the tariff impact has been muted for now. Categories like vehicles, apparel, energy that saw declines and may stabilize, but there was no dramatic price spike in core goods. Goldman Sachs estimates a zero point zero pp contribution from tariffs to core CPI was not enough to push the number above consensus. This supports the view that tariffs are having a contained or lagging effect, at least in June. So let me full circle. The reason why I'm reading this is because I want to show you guys that we are beating the freaking banks. I've showed you guys that we're beating Coinbase with our fundamentals. I've showed you guys that we're beating freaking Uphold with our updates. Now I want to show you guys that we beat the banks. So look at the time. Oh, dang, the time isn't here when this came out. Bummer. Okay. So this report, I'm going to show you guys the timestamp, or at least try to, on Forex Factory when this report from ING came out. Mind you, I wrote this report today. If you scroll down, when I gave you guys the update on this, I gave you guys this report 8 minutes after the data came out today. Okay. So you can see that timestamp right there, 7:38 a.m. This report from Forex Factory that I gathered, if we come over here from Forex Factory, let's see if there's a timestamp on when this came out. Okay, here it is right here. So an hour and 47 minutes ago was roughly about 9:50 a.m. Okay. So you can see that this report from ING, from a financial institution, was written 2 hours after the report that I gave you guys here at CYPRX. Okay. The reason why that's so important is because if you look at what I said, shelter prices remain sticky. Shelter costs were flagged as a stubborn contributor, continuing to add upward pressure to core inflation. However, no new acceleration in inflation was reported, and overall, the core service inflation remained stable. Does this inflation data support or weigh on rate cut bets? Check mark. It supports rate cuts, but doesn't urgently accelerate them. The lack of a surprise of upside inflation keeps the door open for gradual rate cuts, but does not force the Fed's hand. Markets are now still pricing in 50 basis points of cuts in 2025. September cut odds stand at 60%, slightly down from earlier this week at 65%. Powell's patient stance remains valid as inflation shows no major reacceleration. A print of 0.3% or higher in core CPI could have undermined those expectations, but the 0.2% result buys the Fed time and will likely keep gains on the table for risk assets. Only thing that would kill risk sentiment after this report is hawkish Fed comments or negative tariff headlines. I do not see this inflation report having a major negative impact. Even though it does not support July rate cuts, it still keeps the door open for possible cuts later this year. Sellers are still defending higher prices in crypto for now, but it does not seem like buyers have completely lost control yet. Risk assets and market implications. The markets are likely to take this data in stride, with equities and crypto supported by the fact that inflation is not spiraling out of control. Bond yields remain in range bound as rate cut expectations are not drastically altered. So all these little tiny key talking points, watch when I go read the bank report that came out 2 hours after ours. Literally word for word says the same exact thing. The US dollar might firmly slightly, but sorry, excuse me, the US dollar might firm slightly, but overall, risk on assets should maintain support in the absence of a negative surprise. Monitor trade headlines moving forward today for further market movement. We aren't seeing any aggressive buying after the data, so we need to be patient. Key summary points: inflation increased modestly, but was in line with forecast. There was no clear signal that tariffs are dramatically impacting prices yet, and Fed rate cut odds are still intact, but not accelerated by this data. And so here again, you can see that Watcher Guru has literally millions of followers, I'm pretty sure, and they literally lied to the general public today. So I went in and showed reports that I read where you can see that this is directly from CNBC. The numbers were right in line with the Dow Jones consensus. Yet Watcher Guru told everybody that they came out above market expectations. No, no, no. The market yesterday already priced in that the inflation was going to come in at 2.7%, slightly higher, which is why yesterday, before the data came out, we saw selling. And today, we haven't really seen any aggressive sell pressure. It's because all the institutions sold yesterday because they priced the data in. All right. You can see here, these are the readings from trading economics. The consensus here, I highlighted in bold, is 2.7. The data came out at 2.7. And then some of the other readings, the core inflation month over month and the core inflation rate year over year, actually came out slightly below the consensus. So you can see here, the consensus was that the reading was going to come out a 0.1% increase, but actually in the figures that printed, we saw a slight decrease. So that is what kept the rate cut bets on the table in today's inflationary report, where this inflationary report shows a mixed figure. The inflation rate year over year did come out slightly higher than the previous reading, and so did the core month over month and year over year. But the month over month and year over year inflation rate did come out slightly below the consensus, which kept those rate cut bets on the table today. Here's another report. It says that Secretary Scott Bessent mentioned that one high inflationary figure, right? He wouldn't put too much emphasis on it, which is exactly what we talked about yesterday. We wanted to see market participants say. We wanted to see them say that one inflationary report coming out skewed to the upside is not going to have any market deterioration sentiment on the rate cut bets. And that's exactly what we got today. I shared that video breakdown for you guys in the chat this morning. Then here you can also see, this is a report from yesterday. Inflation in the US was expected to rise at an annual rate of 2.7% in June. The overall inflation rate is expected to tick up further away from the Fed's 2% target. So I always like to put my money where my mouth is at. Watcher Guru straight up freaking lied to people today. So that was just mind blowing to see, which confirmed my analysis that I really truly think that these influencers are like paid actors in the market to try to manipulate people into not understanding these markets properly. It's really truly mind blowing to me. So moving on, now that you guys have all that information, let's come over here and let me read this report directly from a financial institution. Again, keep in mind that came out 2 hours after the report that I gave you in the Community This Rising. A slightly softer than expected June core inflation reading keeps alive the chances of a September Federal Reserve interest rate cut. But the risks is that we get less benign prints for July and August. That means we will need to see clear evidence of softer jobs figures to trigger Fed actions before December. I'm going to highlight that in purple here because now moving forward, the reason why it's important to pay attention to these bank reports is because now What tomorrow do we have to pay attention to? And what is the first major impactful report that we need to be mindful of reading this highlight that we're going to get in the first week of August? Can anybody tell me? If financial, let me ask that question again. If financial institutions like ING are telling us that,
Tariffs.
hold on, Rob, hold on, let me ask the question again. That was not the right answer, but definitely you're on the right thinking path. If a financial institution is telling us here that we need to see clear evidence of softer jobs figures to trigger Fed action before December, what financial reports now do we need to be more mindful of moving forward?
The labor markets.
Labor market data. You see how easy this stuff is? So that means, right, let's do a forward outlook. What do we have tomorrow? Wait, what's tomorrow? Wednesday. Sorry, excuse me. What do we have Thursday? We have labor market figures with unemployment claims. We have one more unemployment claims figure before the end of July after that. And then the first week of August, every Friday that we get, the first week of the month, every Friday, what report do we get? Can somebody tell me? It's the first Friday of every single month. What do we get?
Isn't it the JOLTS opening? The JOLTS figure job opening?
Close, D'Angelo. Jolt's jobs figures is in that same first week of the month, but that's not what we get every Friday, but close.
NFP.
NFP, right? So Jolt's jobs figures and ADP non-farm payroll comes out before NFP. Usually Jolt's comes out on Tuesday, the first Tuesday of every single month, and then ADP comes out either the first Wednesday or Thursday of every single month. And then every single Friday, the first Friday of every single month, we get the NFP report and unemployment rates. And so now moving forward, we can see directly from a financial institution where their focus is going to shift. If the inflation reading was not enough to shake rate cut bets, that means rate cut bets are still going to remain on the table. But if we want to see the Fed actually commit to rate cuts, we need to see cooling in the labor market. So now that is going to be where our focus shifts in our reports. When I go in and I write the reports for you guys moving forward in weeks ahead, you guys are going to see me highlight that, right? So I'm just trying to give you a perspective on how I pick apart these fundamentals. As we continue down here, it says this sub-consensus core CPI figure in may give President Trump an excuse to launch another salvo at Jerome Powell, but we always suspected it would be 3 months from April, May before the tariffs show up in force. That means the July, August, and September CPI reports are where we will see a potential for a 0.4% plus month print. President Trump has been pushing the Fed to cut rates by 200 to 300 basis points immediately. And in two of his appointees to the FOMC from his presidential term, Chris Waller and Michelle Bowman, suggest that they could vote in favor of rate cuts as soon as July at the FOMC meeting. However, the rest of the committee feels that they have time to wait, especially in light of the recent firmer than expected June jobs report. Then right down here it says, we doubt that they will have enough evidence to be certain of that by the September FOMC meeting, so we will need to see some significant weakness in jobs to trigger a rate cut at that point. So yet here again, they mentioned for the second time in a row that we need to see weaker jobs reports in order to see a rate cut from the Fed. Remember, I told you guys that when these institutions repeat something, you should be paying attention to it. So I highlighted that in bold. Then if we continue down here, it says, to finish this off, nonetheless, interest rate cuts will eventually come. The cooler growth environment with a softer jobs narrative and weaker wage pressures will help ensure that inflation is indeed temporary. Moreover, the shifting dynamics of the housing market will mean housing costs, which have been a major driver of inflation in recent years, will increasingly become a source of disinflationary pressure, as hinted in the chart above, using the Cleveland Fed's new tenant series rising. With the risk that employment does start to climb later in the year in response to intensifying growth headwinds, we believe that the Fed will be in a much more comfortable place cutting rates from the December FOMC meeting, kicking off with the 50 basis point move. So, what did I say to you guys in my analysis today? Right? I said to you guys that the inflationary report actually did not have a negative effect on the market sentiment and that rate cut bets are still on the table, word for word. Yet here you see a freaking channel with millions of followers lying to people. Then you see a bank report mirroring exactly what I told you guys, that rate cut bets are still on the table, albeit they're slightly pushed back. We still just need to see more data before the Fed actually commits to cutting rates. And that data that we now need to focus on is going to be on the August and September inflation that we're going to get, and the labor market figures moving forward, right? But overall, they pretty much word for word said exactly what I said, that the inflationary today actually came out modest and slightly lower and in line with expectations, and that rate cut bets are still on the table. So it was just great to see a bank report come out in line with the reports that I give you guys before any of this stuff really kicks off, prior to the New York session trading session started today. And it just goes on to solidify everything that I'm doing here for you guys and that myself and Scalper are putting out in terms of real valid institutional information and not just this hypey bull crap that people pay attention to because it sparks dopamine and they think they're going to make money from it. It's wild. So that was that. Okay. Moving on. I still hold the bullish narrative in crypto. Why? Because the total cryptocurrency market cap has not broken higher time frame structure. So if we take a look at higher time frame structure. Yesterday, remember in our Zoom call, I specifically highlighted, you guys can see here, I specifically highlighted this higher low area of interest as our first area where the market could pull back and we could see buyers defend. And today, sure enough, we can see that buyers defended exactly from those levels. If we jump down to the lower time frame, you can see that sellers tried to overpower buyers not once, but twice here at these levels, and buyers are still defending. So as long as these prices hold, we can expect again that the path of least resistance is skewed to the upside, especially considering that today's fundamentals did not completely deteriorate the sentiment that the Fed is going to be allowed or able to cut rates later this year, right? Same thing with XRP. I still firmly believe that the path of least resistance is to the upside as long as price remains above buy deltas. Every single time that price does retrace after buyers make an attempt to break above the most recent sell delta, which is $3. You can see they made an attempt here. They failed. Sellers defended. Once price got pushed back down into a delta, buyers came back in, made another attempt. So this shows buyers' intent to push price action higher and not allow sellers to gain the upper hand in the markets right now. And that, as of today, is still holding weight. We can see that sellers tried to make another attempt to overpower buyers, but buyers are still coming in and they're making an attempt to defend, and we're not breaking previous bullish structure. Previous bullish structure, you can see, exists in the form of higher highs and higher lows. Always try to make an attempt to digest those higher highs and higher lows on the 4 hour time frame and above, right? So you can see here, right now, this is the most recent higher low that XRP would need to break in order for us to start to shift that bullish ideology. And that is yet to take place. So we cannot trade against that narrative or that trend. We need to maintain and hold that narrative and that trend until proven otherwise. So that level comes in at about $2.75. As of right now, price action is still holding above that. That means that buyers, if they do, could make another attempt to break these highs. If we end up breaking these highs, retesting $3, that would open the door for the next sell delta, which immediately comes in at about $3.16. Okay. I'm going to take it right there. Like I said, I'm not going to do a deep technical analysis dive on XRP right now. The yesterday's report and the reports from that prior are pretty much the same. We're still looking at these levels of sentiment sours, anywhere between $2.56 to $2.26 for a possible pullback and re-entry if the market sentiment does sour and we see a day where we get $100 billion plus wiped out from the market. And if not, then the path of least resistance is going to remain to the upside above 275. The very simplistic, right? And if we don't break above $3, then we're probably just going to see ranging price action. We're just going to continue to see buyers make continued attempts to break $3, sellers defend, and then heading into Thursday and Friday, the market's just going to keep looking like this, right? We need to see some type of catalyst, whether it be a bullish one or a bearish one, completely shift the market dynamics from today's landscape. And we have yet to see that right now. With that being said, moving over into the tariff announcements and what to be mindful of tomorrow. Tomorrow, we have more inflationary figures to be mindful of. We have the core PPI and the PPI month over month, year over year figures. The ideal rainbow scenario, just like today, we would like to see figures that come out below the previous reading and below the market forecast. That would show that there are no inflationary impacts from tariffs. That would solidify the FOMC meeting in minutes Fed speaker's perspective last week that said that tariff worries are behind us. They don't think that inflation is going to be negatively impacted from tariffs, and that would support risk assets. We could see a scenario like we saw today, where we see mixed readings. Some of the figures in inflation coming out slightly higher, and some coming out slightly lower, and that would probably just continue to support the narrative that the Fed will eventually be able to cut rates. However, rate cuts would not be imminent, and that would most likely just keep price action range bound. And then the worst case scenario is if the core PPI comes out significantly higher than both the previous and the forecast, and that does significantly weigh on those rate cut bets. Right now, the likelihood of two rate cuts or 50 basis points of cuts from the Fed is still on the table. If we saw higher PPI figures tomorrow, maybe the odds of two rate cuts dwindles down to only a 25 basis point cut or one cut this year, and that weighs on market sentiment. So that would be the worst case scenario, right? So that's what we're going to be mindful of tomorrow for the inflationary figures. We also have multiple Fed speakers tomorrow as well. We have Fed member Barkin and we have Fed member Barr speaking tomorrow, along with Fed Williams as we roll over into Asia session. So we will be mindful of any of their comments surrounding monetary policy, inflationary outlook, economic stability, labor market data, so on and so forth. Do their comments support rate cuts or do they not support rate cuts? If their comments support rate cuts, then it's most likely going to help support risk assets. Inversely, if they don't, they push back on the idea that the Fed is in a position to cut rates this year. It's going to most likely weigh on risk assets and be something that boosts demand for the dollar or other safe haven currencies. Looking at the tariff front right now, we're seeing headlines from the EU. We saw headlines this week from Indonesia and the United States. And then we also are seeing headlines from Canada in the United States. Outside of that, all other major jurisdictions are still on standby, excuse me, and Mexico. We'll get into all those in a second. Outside of that, all of the jurisdictions are kind of on standby, and we're still on that teeter-totter between possibly seeing positive negotiations or a complete fallout in trade talks. So starting with the EU. Here you can see in this report, this is from today, July 15th. This is the most recent update that I could find. It says, Lars, the foreign minister of Denmark, which recently assumed the presidency of the EU, said the ministers vowed to work together in negotiating a trade deal with Washington or agreeing on countermeasures. I want you guys to tell me, and I'm going to highlight this using either red or green. Do you think that this sentence right here, I highlighted it in yellow, but do you think this sentence right here is supportive of a risk on mood or risk off? Can someone tell me?
Supportive.
It's supportive, right? Good job, D'Angelo. Why? Because it literally says that they are still trying to work together to negotiate a trade deal. That is positive rhetoric. That is not negative. That is positive. So we're going to change that now to green. I'm just trying to show you guys how you can start to pick apart these highlights so you can paint the picture for yourself. And you don't always need to rely on my updates. And I'm trying to teach you guys how you can do this yourselves and be just as effective and efficient as me and Scalper. Next, the EU remains ready to react. That includes robust and proportionate countermeasures if required, and there was a strong feeling in the room of unity. Rizmoon told, I'm sorry, I'm butchering this person's name. Rizmoon told reporters after the meeting. Do you think that this supports risk on or weighs on risk sentiment? I'll read it again. The EU remains ready to react, and that includes robust and proportionate countermeasures if required, and there was a strong feeling of unity in the room.
I call it negative.
Red.
Brad? Okay. I'd say that that's neutral. I agree with you that it does hint at a possible negative tone, but why do you guys think I'm going neutral with this? And I'll leave it yellow.
Well,
You gonna
because they
answer?
say they're ready to react. So if we get a good reaction and we meet up, come in the middle, then they're going to agree
Exactly.
to it. Yeah.
Great. Good job, right? Really easy. So it's not negative, albeit it could possibly be negative, but it could also be positive if they don't need to react with any retaliatory measures. So they do mention that they are ready to react, but they haven't mentioned yet that they are going to react. So we never want to jump ahead of the markets. Go ahead, D'Angelo.
When you see words like if, wouldn't that just automatically jump at you as this sounds is a neutral outlook, given, what they're pretty much mentioning within this statement of the report? Because that to me, that makes sense.
Yes, yes, but at the same time, it's kind of like you got to decipher the context after what comes next of that if. So, like, if it's
Mhm.
like if, you know, but yeah, I get what you're saying. If is definitely one of those like neutral vocabulary words for sure. All right, next little tiny statement. It says the tariffs also announced for Mexico are set to start on August 1st and could make everything from French cheese and Italian leather goods to German electronics and Spanish pharmaceuticals more expensive in the US and destabilize economies from Portugal to Norway. Meanwhile, Brussels decided to suspend retaliatory tariffs on US goods scheduled to take effect on Monday in hopes of reaching a trade deal with the Trump administration by the end of the month. Do you guys think that this sentence right here is positive leaning or negative leaning?
Positive.
Positive, right? Meanwhile, Brussels decided to suspend retaliatory tariffs. That is a positive statement right there on US goods scheduled to take effect Monday in hopes of reaching a trade deal. That is positive. Hopes of reaching a trade deal with Trump administration by the end of the month. So we're going to go ahead and highlight that in green. That is more supportive of a continued risk on environment. Last but not least, the countermeasures by the EU, which negotiates trade deals on behalf of its 27 member countries, will be delayed until August 1st. So, all in all, right, the reason why I just did this for you guys is because when you're reading these fundamentals, I don't sit here and do this in real time, like highlight shit. My brain just does this. So when I go in and I type out fundamentals for you guys and I see that in my brain I highlighted this fundamental piece as more yellow and green, neutral and positive, then when I go out and tell you guys, hey, the sentiment today is going to be risk on, this is why, because you see no red here, right? There's no red. Now, if this report looked like this, in my brain when I'm highlighting it for you guys, where I see key vocabulary that's more risk off and neutral or risk off totally, then when I type out my reports to you guys, I'm going to be like, hey guys, today the environment is most likely risk off. Does that hopefully what I just did for you guys just then paints a clear picture on how my brain analyzes these reports and what you kind of need to do moving forward to pick apart these fundamental dynamics, right? Heading over to another one. We're not going to do that now, just that one report. I wanted to kind of show you guys that example so that way you can use those tactics moving forward. This is another one where President Donald Trump said on Tuesday, today, the United States has reached a trade agreement with Indonesia, but there's one of those key vocab words, but he offered no details, including how comprehensive a deal might be, any possible term, or when any provisions might take effect. Do you guys, would you classify this as more positive, negative, or neutral? I'll read it one more time. President Donald Trump said Tuesday that the United States has reached a trade agreement with Indonesia, but he offered no details, including how comprehensive a deal might be, any possible terms, or when any provisions might take effect.
Neutral?
Yeah.
Neutral.
Good job. I'd say it's neutral to positive leaning. I'd say that it's neutral with a positive tone. So good job, right? So if you're doing this analysis in your mind, you could be like, that's like kind of in between, but it's definitely not negative. So I'd say it's pretty neutral. Pretty much has a muted effect on fundamentals, doesn't really impact price, but at the same time, doesn't really weigh on the market sentiment, right? Great deal for everybody, just made with Indonesia. I dealt directly with their highly respected president, Trump wrote on social media, deals to follow. So we're going to be mindful of any of those announcements moving forward. The reason why it's important to read these things is because it gives us insights to be mindful of. We now know that we need to be paying attention to true social media whenever he updates us on the deal of whatever he just made with Indonesia. Okay. This marks Trump's fourth trade agreement announcement in 3 months. He had said previously promised dozens of deals with U.S. trading partners over that time frame, but that has been proven tough to reach. Next, this is a report from Canada. So this is from today, July 15th, and it says most countries will likely have to accept some baseline tariff rate on their goods by the United States. excuse me, Prime Minister Mark Carney signaled to the market on Tuesday morning on his way to a meeting with his cabinet on Parliament Hill. There is not much evidence at the moment from the deal agreements and negotiations with the Americans for any country or any jurisdiction to get a deal without tariffs, Carney said in French when asked whether he believes it is possible to have the levies removed entirely. So I'm just going to leave that yellow as we haven't really seen anything come into fruition yet. There have been no deals, no negotiations between any country or jurisdiction he's mentioning. So, albeit it's not really positive, it's not really net negative either because we don't know what's going on. Carney also told reporters before Tuesday's cabinet meeting that he expects talks with the United States will intensify in the coming weeks. So the reason, why do you guys think I highlighted that out of this report? Carney also told reporters before Tuesday cabinet meetings that he expects talks with the United States will intensify in the next few weeks.
That's good for possible deals being made.
Good job, Dana, right? It just gives us an insight into a time horizon as to when we need to be paying attention to these things, which is another little tiny key piece of vocab that you guys want to start to pay attention to is when these things are going to take place. When they give you guys dates, like it says here, before July 21st, well, if we look at the date, July 21st is pretty much in a week from now. And so if they're telling us in the coming weeks, we could see an announcement, this could be a key date to keep on our radar, or maybe even August 1st. As you can see here, it mentions two dates by July 21st or August 1st, right? So we now know that in the next couple of weeks, possibly trading days or sessions, we still need to be attentive to possible trade negotiations that could be announced with Canada that could move the markets, right? Outside of that, that's really all that I gathered from this report. So you can see how much fluff is in these reports, and you can see the important parts of these reports. Last but not least, on the Mexico front, very simplistic following President Donald Trump's announcement on Saturday to impose a 30% tariff on imports from Mexico. Where the Mexican government currently stands is that they are currently working with the US to secure a trade deal before the August 1st deadline. So, yet again, really the only thing that I highlighted out of this entire report is that we are still set to see a deal announced between Mexico and the United States before August 1st. So, again, just a key fundamental date and neutral commentary from the Mexico-US trade front. Outside of that, that's all that I have in terms of the tariff updates as of time of recording. We have still yet to see tariff updates from Japan. We still need to see what's going on with China, India, and some other major jurisdictions. So still just remain attentive. I will continue to update you guys as things continue to move on. On the geopolitical forefront, we're not seeing any negative surprises on the geopolitical front, and instead, we're actually seeing some positive rhetoric. This was a recent report from July 15th. Iran is open to dialogue and is seriously pursuing diplomacy, President Massoud said as he set out his aim for a resumption of nuclear talks while warning that Iran would defend the nature of rights of its people. Why it matters. Iran's president signaled a more diplomatic tone amid heightened tension and distrust over nuclear negotiations weeks before both the United States and Israel launched strikes amid ending Iran's nuclear program. His remarks suggest Iran is looking to ease international pressure and avoid escalation. What would you guys say that last statement is? Bullish, bearish, neutral, dovish? What do you guys say? Green, red? His remarks suggest Iran is looking to ease international pressure and avoid escalation.
Bullish.
Right?
Bullish.
That's positive. That is supportive of a continued risk-on sentiment. That is a tailwind where if it was affirmed or confirmed or announced, it would support continued risk-on optimism, right? Resuming talks is key to enabling verification of Iran's nuclear program after it suspended its cooperation with the International Atomic Energy Agency following the Israel and U.S. strikes on its nuclear facilities. Last but not least, one thing that we are definitely going to start being mindful of is this announcement. I'm not going to read this entire thing, but remember in yesterday's report, Trump announced the possibility of 100% tariffs on Russia, which would be freaking insane if they did come into fruition. Definitely a catalyst that we need to be mindful of. But long story short, right now, Russia is taking President Trump's statements very serious, and they are on the brink of determining how they're going to react to this, whether or not they're going to retaliate, how they're going to respond. Pretty much overnight, they responded with continued attacks on Ukrainian forces. So the war continues. Albeit right now, this is not having a negative impact on price action. If the rhetoric between the two jurisdictions intensifies moving forward, we do know, and hopefully you guys understand, that it could be a catalyst that weighs on sentiment. So for now, I highlighted this pretty much entire thing in yellow. And moving forward, if we see any negative announcements or headlines between Russia, Ukraine, and the United States, debacle escalating further, it's something that we just need to be mindful of. And if not, then we'll continue to price it in as neutral or possibly supportive, considering any ceasefire announcements or lower tariffs from Trump's recent threat of 100%. So just be mindful of that. Okay. We are paying attention to any Russia retaliations from Trump's comments yesterday. This motherfucker, this Trump dude, he's crazy. Fucking crazy. Um, did you see what he said on True Social Media the other day? He laughed and was like, ha ha ha, when I speak, I move the markets. Oh man, it kills me. We're at such a time to be alive right now. Okay, so to wrap up that fundamental breakdown and before I leave the floor open for questions in terms of fundamentals, all right? The landscape today painted a mixed picture, but did not weigh on the current market sentiment. Yes, yesterday we saw some profit taking, which is normal considering that we tapped into new all-time highs on Bitcoin, where if you go back and you look, Scalper had identified that sell orders, you have to remember these are sell orders that literally just sit at these price levels where institutions with so much money in these markets have major positions just sitting there waiting for price to come up into them to defend. Well, that level was hit yesterday on Bitcoin. So, of course, or what was it the day before? So, of course, what do we see? Some slight profit taking. But we have not seen enough sell pressure to completely change our current market sentiment from bullish to bearish. In order for that to happen, we need to see all the fundamentals that I just mentioned completely deteriorate market sentiment. That means tariff negotiations radically spiraling out of control, higher tariffs imposed between multiple jurisdictions, higher inflation tomorrow, continued hawkish Fed comments, which we have yet to see as of right now. Maybe labor market data on Thursday. We'll get to that. I don't want to get too ahead of the curve. We'll talk about that in tomorrow's report. And then any escalations in geopolitical tensions, all of those things driving more demand for safe haven and less of an appetite for risk assets. We have yet to see that yet. So that means that right now we're going to continue to hold on to the narrative that the uptrend is going to continue after this slight pullback and after the bulls find support or find a price level in either the form of deltas or buy volume that they feel comfortable enough defending their previous buy positions at. All right. Moving forward tomorrow, like I mentioned, PPI data, Fed rhetoric, tariff updates, and geopolitical tensions are going to remain on the forefront. I'm not going to type out a report today because there's just so many moving pieces of the puzzle. I feel like if I type a report out now, by the time we roll over into Asia session, I'm gonna have to like update that. So I'm just gonna hold off on that. Just know that tomorrow we're pretty much gonna be mindful of the same scenarios that we got in today's inflationary report. Again, the ideal scenario tomorrow for us to see a massive bullish continued move in crypto would be if we get lower inflationary figures that come out both below previous readings and below market expectations. If we got dovish Fed comments from multiple Fed speakers supporting rate cuts in 2025. If we got no new tariff escalation tensions or announcements, or we saw solidification that these major jurisdictions like the EU, Japan, any of those major jurisdictions can come to cahoots with each other and agree on tariffs that both benefit either jurisdiction. And then obviously, of course, ceasefire talks, continued Iran negotiations with nuclear agreements, or any just announcement that geopolitical tensions are not spiraling out of control and that things are remaining contained. Those four factors would continue to drive risk on sentiment. And if any of those things change or shift to the opposite spectrum, we could see more continued profit taking and a shift back into safe haven assets. Okay. So outside of that, that's what we're going to monitor right now. I'll leave the floor open for questions in terms of fundamentals. And then if not, there's no questions, we'll shift over into the second portion of today's breakdown. And I'm going to stop this recording.